Welcome, everyone. This is the SOSV Climate Tech Summit, and you're at the breakout featuring Syensqo Ventures, which is a great friend to SOSV and a very important corporate venture capital firm in the materials and chemistry space. And we're very lucky today to have two of the general partners, Apelia and Matt, to take us through Syensqo and Ventures and what they're interested in as investors and how it relates to the larger Syensqo and Solvay enterprises. So without any further ado, I'll hand it over to Matt and Capelia to tell you all about Syensqo.
Great, Ned. Well, thank you so much for having us today, and we really appreciate being part of this conference in the SOSV group in general. So in terms of background, again, my name is Matt Jones, and I'm the head managing partner of Syensqo Ventures. In my career, I've now spent 24 years doing broad hard tech, sustainability, clean tech investing at the intersection of large corporates and startups, all trying to focus on innovating in these industries. The fund that I started at back in 2000 was really focused on a disruption to the electric energy industry. It was a fund called Nth Power. And as California was deregulating the energy industry, their thesis was that would create opportunity for entrepreneurial startups to really fundamentally change how we generate, distribute, and interact with electrons. And that resulted in 28 different corporate LPs over time joining their various funds to really push the edge of how hard tech innovation could be brought to market where startups and corporates work together. So I did that in San Francisco for 15 years. We had 4 different funds. And then in late 2015, I tried my hand at my own startup. It was in the energy efficiency space, just to put myself in the shoes of an entrepreneur and really see the challenges and struggles that you have by trying to bring some of these products to market. And then 8 years ago, or just about 7.5 years ago, I was recruited into Syensqo, which Capelia will talk about a little bit more. But to continue that venture capital investing, and again, trying to couple what large corporates do really well with what entrepreneurs do really well to try and accelerate the pace of innovation and startups getting to market and having an impact on our global, planetary health and human health. So with that, I'll turn it over to Capelia and let her introduce herself.
Thanks, Matt. Hello, everyone. I'm Capelia Marinkovic. I'm a partner at Syensqo Ventures. I've been with the team for over 8 years. I'm a chemist by training, and before joining Syensqo Ventures, I worked for a couple of startups in the biotech and sustainability space, including a company that was one of the pioneers of life cycle assessment, carbon footprinting. So I've been really interested in climate and sustainability for over 15 years. Before joining Syensqo Ventures, I was at McKinsey for a few years, and I started my VC career at Sofinnova Partners. I'm going to tell you a little bit about Syensqo, and then I'll let Matt continue and tell you a bit more about our funds. So at Syensqo, we are scientific explorers. We're scientific explorers. So basically, Syensqo Ventures is a venture capital fund of Syensqo, which is a spin-out of Solvay, a larger specialty chemicals company. And we have a really strong focus on science, hence the name Syensqo, in case you're wondering how to pronounce it. And we have a really strong mission to explore, create, and advance humanity. Solvay, and therefore Syensqo, have a legacy of over 160 years when Ernest Solvay created the company as being scientific pioneers. And this is a picture of the first Solvay conference where you can see Ernest Solvay in the middle, and you can also see Marie Curie and Einstein. And so we have this, legacy of really at the center of an ecosystem of scientific pioneers. To this day, we have continued the legacy of this conference was a Solvay Prize, which is given every year. And a number of scientists who have won the Solvay Prize have actually won also Nobel Prizes afterwards. So we're very excited to be at the forefront of this scientific innovation. Among other initiatives, as scientific pioneers and also really strong sustainability advocates, Syensqo has recently announced that we're sponsoring and will be developing products for Climate Impulse, which is the first flight that to go around the planet just on hydrogen energy. Actually, a few years ago, Solvay had already supported and developed products for Solar Impulse. I don't know if any of you are familiar. It was the first flight to go around the globe just on solar energy. That was led by Bertrand Piccard. And Bertrand is actually taking now this new challenge, and we're really proud partners of this adventure. Electrification and lightweighting are very important topics for us. Matt will talk about our business lines in more details. But we're excited to be partners of DS Penske and Auto Racing team in Formula E for electric cars. And the last example of scientific innovations that we support, we're proud partners of SOSV and investors in the Genesis Consortium funds, which invest in graduating companies from the IndieBio cohorts. Now, Matt, I'll let you talk more about our funds, and we will take questions afterwards.
Great. So first of all, just a little bit more on Syensqo and therefore where Syensqo Ventures looks to invest. So Syensqo as a corporation is really looking at a lot of the same drivers that you as entrepreneurs are also probably looking at of where are we going to drive growth by solving climate level problems. And so when we look at that as a material company, and we are a material company, we're usually at the beginning end of a value chain, but we look at it from a customer perspective of what are they needing that will require material innovation. So broadly speaking, we have two main lines of business. One is our materials business, which really focuses on high performance, cutting edge materials that show up in things like electrification and lightweighting. So as we transition to new forms of mobility, be it electric vehicles, be it hydrogen as a fuel source, or lightweighting to make those products better, we really think about adding those materials to those solutions and bringing them to bear. The same thing with connectivity as we think about the revolution going on with AI, how we make software or how we make chips, how we do semiconductors, the devices that they go into. In order to push the edge on performance, you're going to need to push the edge on materials. And so we look at those big drivers as ones that really can leverage Syensqo in the materials that we have in our portfolio. On the same topic, we have a whole business unit focused on consumer and resources. So these are products that we use in our everyday life. They're in everything from healthcare to home and personal care to even when we talk about resource efficiency, how good we are at extracting those minerals in a efficient and environmentally friendly way. And so these are all things that we look at, and we know you as entrepreneurs are looking at what are going to be those big breakthroughs that we need to make sure that we can continue to have the quality of life that we're used to, but at the same time reduce our environmental impact. And so, Gopali, if you go down to the next slide, one of the reasons why we want to work with entrepreneurs and entrepreneurs want to work with a large corporate is the access we bring. And so just as an example, our materials are in 85% of all single aisle aircraft. So we have access to customers and value chains that we want to work with entrepreneurs on accessing. Same thing in electric vehicles. We're in 45% of all electric vehicles. That's everything from the battery to the high performance polymers that make for higher performance motors. In agriculture, we don't do actives. We don't do the new pesticides or adjuvants, but yet we do the things that get those products into the field. So we are on seed coatings for 30% or greater than 30% of all the corn seeds. So we have this global reach as a company to a lot of these end markets. Just one other example, which is one that we see a lot of promise in the entrepreneurial space as well, is really in home and personal care. As we shift from petroleum products and petroleum inputs to more bio-based and circular products, things like shampoos, home and personal care, cosmetics, those are all going to be early adopters as we make this transition. So this is the reach, and this is really where we want to work with entrepreneurs to find those opportunities where Syensqo can be part of the solution with you in bringing these new products to bear. So Capelli, if you want to go on to the next slide. So, Ernest Solvay knew that innovation could come from anywhere, as Capelli talked about with the Ernest Solvay Prize, really focusing on, the great scientific minds of their time. As we've evolved, Syensqo also realizes we need to be working with the entrepreneurial community, that great ideas can come from anywhere. So we have set up our own venture fund, as Capelli talked about. Both of us have been at Syensqo doing this for 8 years. The fund actually was started in 2005, so we have a long history and long track record. And really what we're looking for on the venture side is first and foremost that strategic fit. Where can we bring something unique to a startup that helps that startup accelerate its opportunity, but at the same time also creates a great opportunity for us at Syensqo? We want to be more than just capital. We want to be part of the solution and work collectively with you. We are financially focused, so we want that strategic fit, but we also want to invest with co-investors. We want to be on the same side of the table as you, as the founders and entrepreneurs, and make sure that we're working in the same direction. We are an evergreen fund. We talk about assets under management. I think we're on the third turn of our fund. It's an 80 million euro fund. And so as we invest, we take our proceeds and reinvest in new companies. And so we've been very successful at finding those winning solutions and taking that capital and putting them into the next generation of entrepreneurs. From a stage perspective, we're more agnostic. Again, what we look for, what we filter on is, can Syensqo bring something to the table to help the startup? That is shifted towards earlier stage, because as you're developing your product, you need help, and we're probably more impactful at the early stage. It's also really hard to get a large corporate and a startup at the early stage to work together. So the role that Capelli and I play a lot of times is trying to bridge that divide between startup and large corporate. And then finally, we're a global team. We're 6 investment professionals, 2 in the US, 2 in Europe, 2 in Asia. But we're backed by 13,000 employees at Syensqo. We can reach into core technical resources, marketing resources, customer resources. That's what gives us capabilities bigger than the team size that we are. And Capelli, if you want to go to the next slide. And finally, this is a snapshot of our portfolio as it exists today. We not only fund startups, but we also do partnerships. So this is the list of the companies we actually have an equity investment, but there'd be an equal list of startups that we've worked with, just providing that business development connectivity to the large corporate, where we're trying to help accelerate, your solutions alongside with opportunities for ourselves. And again, our portfolio aligns with those growth drivers that I talked about earlier. So, in lightweighting, we have companies like iComat, which is a whole new way of manufacturing composite materials so we can have higher performance vehicles. Things like resource efficiency, we're an investor in a startup called DePoly that's bringing a photocatalytic process for recycling polymers, which is really important to us. We really think about the end of life of our products and how to make sure that they can be reused or repurposed going forward. And then finally, on sustainable sourcing, we've actually invested in new providers to Syensqo. So people like DMC, which does precision fermentation, or Bioeutectics, which is a whole new green solvent. Startups that can be vendors to Syensqo, where we can take their products, create our value on top of it, and then access the markets from there. Equally important, we do have a few fund investments. So we do invest in other funds to access different geographies, as well as just to access new networks. So as Capelia talked about, we're an investor in the Indie Biogenesis Consortium, both to support really early stage startups, but also to expand our knowledge and network in the space. So with that, I think Capelia, I think the next slide is we're going to be open for Q&A. And just so everyone has it, our email are at the bottom here. So feel free to reach out to us, after the presentation, if there's something that we talked about that you find intriguing or want to follow up.
Thank you very much, Matt and Capelia. That was a great presentation. From the standpoint of an investor like SOSV, and from many founders, CVCs are kind of this mysterious idea because there's a lot of capital there, but standing behind that capital are these very sophisticated corporations that on the one hand have a lot to offer, but could potentially also be competitive threats and represent entanglements. And it's difficult to tell the story, and in my experience, every CVC tells it a little differently. But if a founder just came to you who was in your zone, materials company, interested in support from Syensqo, what would you say to the question, why should I engage with a CVC like Syensqo with such a strong technical legacy of business and products behind it that goes back generations? Why would this potentially be a good thing as opposed to avoiding CVCs altogether and sticking with more conventional routes of raising capital?
Well, I can start. That's something we try and get to really quickly with an entrepreneur. And the way I think about it is, as an entrepreneur or a founder, you probably have 10 problems to solve. And so you can raise a bunch of capital and solve all 10, or potentially you can work with a partner, somebody like Syensqo, who can maybe help you address one or two of those problems. Can we help you raise less capital, get to market sooner, therefore have less dilution? That also means that there's an opportunity for Syensqo to be part of the overall solution. So, we're doing this not only to support the entrepreneur, but to support opportunities for us as well. And finding that alignment up front is really important. If an entrepreneur comes to me and it's a direct competitor and we're the obvious M&A, it's something that we will politely decline on because, again, I want to be on the same side of the table. If I'm an equity owner, I want us all pulling in the same direction. I never want that conflict of interest. However, startups pivot, large corporates pivot, and that may happen at some point in the future. It hasn't happened in our portfolio yet. But we're investment professionals. If that happens, we're upfront about it and we handle it accordingly. But really, Ned, the way that I answer that is, founders, entrepreneurs, startups, you have options, and you should be looking at how can I leverage a corporate and know yourself, hey, what you want to pull from them, not just the capital, but my biggest filter whenever I talk to an entrepreneurial startup is why Syensqo? What have you done in terms of your resources? Say, if you could help me do this, that will help me, get my product to market much sooner. That's the type of relationship we're looking for, is the leverage of speed and advantage, not of conflict.
I think
I'm sorry, Capelia, go ahead.
Yeah, just to build on that, we're discussing with Matt actually that it's interesting because when we started, it was like over 8 years ago in the Scarcity, and well, first of all, there was not a lot of hard sciences startups out there, but they were mostly financed by traditional, venture capital, and maybe corporates were a bit overlooked. And I think over the past 8 years, we have seen a tremendous change in the market where people have seen the value of working with a corporate all through, the value chain. If it's, as Matt mentioned, accelerating research where we have joint development agreements and we can build something together, we can give you faster access to a market, we can pull our resources on manufacturing. I mean, there are just so many ways, and you can see, a lot of companies that have been really successful, the automotive OEM, or you want an IPO, they had really strong backers as a corporate. And I think it's something that is truly differentiating as a startup, is having the trust and sort of validation stamp of a large organization to validate your technology and the value it brings to the market.
That's a great point. We love it when CVCs come in and join syndicates or lead rounds in SOSV companies because it is very validating. But if I'm a founder again, and I think I would love to do business with a CVC, including Syensqo, but my question is, what happens behind the curtain? If what I really have in mind is that there's a division at your corporation that knows a lot about something that I really need to get educated on or I need help with, how do you make those connections? How does it get from a small group of investing professionals in your fund into the divisions of Syensqo where the experts reside and the real knowledge lives? How do you make those connections?
Yeah, maybe I can start answering. So as Matt was mentioning, showing the list of our portfolio companies, this is just the tip of the iceberg. I mean, there's so much that's happening actually underneath. We have a really, really strong connections with our businesses. We talk to them every 2 weeks, every month. We know we've built knowledge, over the past 8 years of like who's doing what in the organization, and also I think more importantly, getting the trust of the business that we're really bringing value by showing the startups. Many years ago, it was like, oh, I don't know, this is not invented here, or what is this very small organization? I think over the years, we have built this trust in the organization that basically very early stage innovations can actually bring a lot of value to the organization. And so we have this network internally. And so every time we see something that we think can bring value to, a business, we will make the right connections, supports the discussions, facilitates the contracts, make sure we push actually to create more open innovation. And so that's what we've been doing. So there's a lot of work behind just the portfolio to create that strategic value.
Would you actually arrange, just to get into the nitty gritty a little bit? I mean, what's the typical path here? Would you find the relevant people in Syensqo and arrange a meeting for them to talk with the founder and see if there's some basis of collaboration or prototype development or eventually an offtake agreement? How do those conversations go?
Yeah, it's very simple. I mean, if we see something, we usually like to see decks. I mean, if we don't have, we can have whatever information is available from the company on website or something, and then we send it to relevant people who we know are looking for that type of solution. And we say, are you interested in having an intro? And then we organize meetings very quickly. So that's very simple.
Yeah. And what kinds of expectations would you set with founders in terms of what they're really looking for? Of course, every founder has this on their mind all the time, but are you potentially a path one way or another to an exit, something that's going to help with an exit or help with a major offtake agreement or help with some major business development down the line? Is that something that one way or another Syensqo's team helps catalyze?
Well, let me take that one to begin with, which is when we first do an investment, we want to, we're going to act like a financial VC. What's the growth path for this type of company? And what can we do as Syensqo to put our thumb on the scale to help that growth? So an example would be in batteries. We don't make full batteries ourselves, but we make certain additives that go into batteries. So could we invest in and partner with a battery company and bring part of the solution, help them be more successful? That would probably not end up being an acquisition candidate for us, but if we could help that startup have a better solution and get to market faster, that's going to help them with whatever ultimate exit they have. And so we don't get into it thinking, hey, should we be an acquirer of these things? We get into it thinking, hey, how do we collectively improve the product or service going to market? And then if you build a good company, the exits will follow. So I think that's first and foremost, is how do you build a great company? And even Dan Cohen had asked a question in the question list about, hey, would you invest in something that displaces Syensqo? That's a harder one because we're then not on the same side of the table. Those are the ones where I would say, hey, Dan, we love your product and solution. We hope you're successful, but it's probably not the right one for us to invest in with the mandate we have for the capital that we have. There's different flavors of corporate venture capital. Certain firms are set up, hey, go, find the next new thing that will displace us. Go invest in the next competitor, the thing that we should acquire. That's not our mandate. Our mandate is more, can we partner with the startup today and work with them today and create something, collectively with them. I will say, Ned, I think you asked about expectations. This is venture capital. The startup has risk. There's risk to what we can do with Syensqo as well. And so we're both coming into this with a view of, we have a vision of the future. Let's work as best we can right now in the present to, make milestones and progress that forward. But it doesn't always work out either way. Sometimes Syensqo doesn't come through. Sometimes the startup doesn't come through. So what Capelli and I, our job is to make sure that those, we're aligned with that startup and the founder as we get started, and make sure we keep that alignment. And just like with everything in venture, work to milestones and continue to progress and hopefully create value along the way.
Yeah, that's a great answer. Thank you for that, Matt. So we have some great questions coming in from the audience. So I'm going to start turning to those. This is from Simon Isaacson. He has a very, very specific industry in mind. And he asks, as a resource recovery membrane startup, we'd love to hear what your partnership with the membrane company on carbon capture might look like. What do you bring to the table in that case? Would love to hear more about a specific example. So I hope I'm not putting you on the spot here, that this is actually a category that you're actively thinking about, but do you have a response to that?
Yes, maybe I'll take this one. So we have invested in a company called Ardent, previously called Compact Membrane Systems. Some people know about it. It's a really great company that's doing CO2 capture. And we have known this company for many years. We started partnering on the material side, and we invested over a year ago in the company as well. So really providing partnership value and equity. And for this company, yes, we are working together to develop materials. So I think this is really a very good example of how we can bring value to each other. So we're not making membranes, but they know how to make membranes really well. But we know how to develop materials that make membranes really good membranes. And so the partnership has been, I think, very fruitful for both parties, where we have been able to, and are still developing, better and better materials to increase their performance, while they also give us, market access, because they know how to make membranes and have clients. So I think this is a really good virtuous circle of really rapid innovation on how we can help each other really bring a great solution to the market.
Thanks, Capelia. That's a great answer. So there's a good one here, a little bit of a technical VC type question from Charles Yap. Does Syensqo invest from your main company's P&L? Is the investment team independent, or is approval required from your corporate stakeholders? I hope that's not too sensitive.
It's fine. It's definitely one that we talk about. So we are a balance sheet fund. And so Capelli and I are both employees of Syensqo. So we're not an independent third party. We do have an advisory board who gets to help us determine what is strategic, where areas that the corporation wants to grow, and where we should be allocating our resources. So they get to help us in filtering deals on that criteria. On the T's and C's of a venture deal, that resides with us on the venture team. And so we can get an approval from our advisory board for, yeah, that's the type of deal we want you to be doing. It's in a growth area where we want to, continue to create solutions. The economics of a finance deal, that's on us. That's hard to get a corporate to think about, because they don't think in terms of venture capital, seed term sheets and safe notes and pre-monies and ownership percentages. So that's what Capelli and I, as investment professionals, then provide is this a good financing opportunity?
So rough alignment with the broader Syensqo, but the details of investment are all in your hands.
Yeah.
Great. And here's another one, again, a little bit inside the weeds of venture investing, but Amireza Ate asks, if you invest in a company, would they still be able to raise funds and collaborate with your competitors and their CVCs? So I imagine that's a question of whether you try to create any competitive limitations when you invest in a company.
Well, I can take this one. So we can invest with competitors CVC. We actually collaborate a lot with competitors CVC because we think that, I guess, the stronger this syndicates, the better the value for the company. As Matt alluded to earlier, we don't necessarily invest in companies that we want to acquire. We invest in companies where the synergies are really strong and we can create value together. Like we don't invest in 3D printing. We invest in 3D printing. We don't make 3D printing, but we have materials that go into 3D printing, or carbon capture example I was talking about earlier, or the battery example that Matt talked about. So because we're not really want to acquire these companies down the road, like we think that if we have complementary skills around the table, that's much better. We have one investment with one of our competitors, CVC, and where we exchange a lot of information. I think everyone has maybe competitors at a high level, but if you look at really the details of what everyone can bring to the table, it's very often actually very specific and complementary skills. So yeah, we have no issue with that.
So your term sheets have no prohibitions on.
And on top of that, yes, we don't do. I think we're trying to really not cap the upsides of of any company.
Great. That's a relief, I'm sure, for the founders out there. So here's a good one from Pal Bogar. He says, or she says, I'm not sure, VCs typically do not want to deal with scientific or technology risk. There must be a PMF, and recurring revenues before they move in. I suspect you're different, but he's asking, or she's asking that question very directly. How do you manage the extra risk if you come in early?
Well, one thing that's changed in my 24 years and for the better is, wow, there's a complete financing stack available for hard tech or scientific based startups. So, everything from Activate/Cyclotron Road, supporting those, PhD people coming out of university, all the way through to first of a kind financing. I think that continuum of capital exists. It still includes things like SBIRs and federal grants and government grants. It still includes friends and family. But as Coppelia mentioned, we are a science-based company. We're okay taking science risk or technology risk, but it also means that valuations are going to be lower at the end of the day because you have to factor that risk in. And so as an entrepreneur or founder, it's also incumbent upon you then to figure out what's the best way to make milestones as fast as possible. Because there's more risk, you're going to want to raise more capital, fund a milestone. So it's a discussion with your investors of trying to find that sweet spot between, the dilution you're going to face at an early stage versus what's the minimum you need to chip away at that technical risk that you're facing.
Right. But if we can yeah, I'm sorry. Go ahead, Coppelia.
So just to add to that, I think the question about how do we also manage risk? We have a lot of very, very technical people within the company. And so we never make an investment without having validation from, technical expertise inside the company, really thorough IP review. It happens very often also that we test in our labs materials and products before we invest in a company. It's very standard for us. So we have our own ways of managing that technical risk.
Understood. And certainly from SOSV's side, the fact that Syensqo participates in our Genesis consortium tells us that you are very brave because you come in so early to support our companies just when they're in the program in the pre-seed stage. So we certainly appreciate that. There's a good question here from Vanessa Briva asking, I assume measuring CVC strategic value is not standard. No, it's certainly not, and depends on sectors. How is Syensqo measuring a successful investing strategy? Partnerships, companies, ratio? Do you have any standard way of thinking or looking at that?
We're constantly trying to do better, and it's a constant struggle between capturing the data and spending a lot of time doing that versus out talking to entrepreneurs and trying to develop the next deal. So yeah, I don't have a silver bullet answer for you. We really do love net promoter score internally. Do people inside Syensqo, do they see the value we're creating? That's not the best metric, but it's at least one that we found that would people recommend us to others at Syensqo? Are we worth their time? Are we bringing them insights? Are we bringing them interesting opportunities that align with where their priorities are? So I don't have a great answer, and Capelia, feel free to add to it, but it's one that we're trying to always get better on. So if you have ideas,
Yeah, I mean, just a
bringing the
few.
next person who asked, we'd love to hear them. Follow up with us and let's share some best practices.
I mean, maybe just a few more. I mean, we were mentioning, joint development agreements. Usually, businesses allocate funds, in a very rational way. And so if they're willing to put the money for research projects on a GDA, for us, it's really a validation that it's bringing strategic value. So we really track all this, what we call MTA, material transfer agreements, JDAs, joint development agreements, because this is really investment from a company that they believe in something. So that's another one that we track. I think also something to mention, it's a slight digression, but I think kind of linked to that as well is corporate value is really important, and obviously we are doing a lot to support our LP, which is LP equivalent, Syensqo, but we're also very financially driven. And on the contrary, maybe of all the funds that we're evergreen, so it's a very long time frame, but we're strongly financially incentivized to return the funds to our entity because basically we have to sustain our own activity. So really strongly financially driven to return funds. So I think this is something really important. Like, we're not just looking at strategic value, but also how we can be sustainable financially as well.
That's an interesting structure. In other words, the continuation of your fund depends on your ability to recycle winnings into your capital pool. Is that right?
Yeah. So it's a very strong incentive.
Keeps bread on the table, I suppose. That's great. Well, you mentioned earlier at the very beginning of the presentation that Syensqo also comes in as an LP in other funds. And Kevin Colas asks, what are you looking for in funds as an LP? What typical ticket are you investing in LPs funds? In other words, how much money? And how do you articulate strategic and return goals from the funds that you invest in? I guess, how do you assess them? Capelia or Matt, what do you think?
Yeah, I'll take that one. So our first filter is really on, does the fund give us access to a new geography or a new technical area where we as a 6-person team do not have that network developed yet? So in our current portfolio, we have 2 funds based in China. Both of them are doing material investment. One is late stage, one is early late stage. So we did that as a way to enter the Chinese market, to then figure out, as a VC fund, how should we be investing in China? So that one was really around making an investment to give us access to a geography. Same thing around Genesis and IndieBio. We see a big imperative of moving our company from petroleum inputs to bio-based inputs. So we want to be immersed in that network. We want to see early stage startups. We want to build a network of other investors that we can co-invest with and share deal flow with. And so, we're investing in these funds just like we would a startup. It has to have great financial return potential. We see it as one of our portfolio companies, so we hold it to that same standard of a return. But then the strategic benefit we get, or that we want to drive, is by being a good part of that ecosystem. So, with IndieBio and Genesis, Capelia spends a lot of time talking to those startups at the early stage, trying to make those connections that Ned talked about. Syensqo as a customer development partner, I think that's equally valuable then also for those startups in that community. And so, we're not looking at LP as a augmentation. We're really looking at it as an extension of our capability to find startups.
I see. Fascinating. Well, in line with that a little bit, but switching back to the investor-founder relationship, Acevedo, Duran, Tanya asks, are you open to invest in Latin American startups as in climate tech, ag tech, an area that's strengthening in the region? I saw that you have a bioeutetics firm in Argentina. Are you looking at Latin America? That seems to be the broad question.
Well, so we're a small team, so we have to spend our time in the efficient way, and so we have invested in biotech actually, which was one of the indie bio companies. I love this company. Most of the team is based in Mendoza, in Argentina, and they have a team in the US, a small part of the team, and we have invested in the US entity. The We are really open to looking at some companies in South America. Matt actually had looked at some points, I think, mining company, because there are lots of really great mining companies in that area as well. So we are open. We don't have the bandwidth so far to scout very actively in that space, but really, open to the idea. I know, Matt, if you want to add anything.
Yeah, I just want to. So we're a member of Global Corporate Venturing that leads a delegation to Brazil each year. Unfortunately, I can't make it this year. Syensqo has a big ag focus group and a bio group in Brazil. So it's definitely a region that we want to target more and do more in. Just like any VC, though, we'd want to make sure we have strong local VC leads. I mean, startups are a team sport, and therefore the investors you invest with, bringing that ecosystem together is really important. And so, we have no restrictions or limitations on investing in Latin America. It's just finding all those, where all the dots connect in terms of doing that. So, yeah.
Well, in a way, Syensqo's participation in our Genesis consortium has given you a nice indirect window, I suppose, on Latin America, because our IndieBio San Francisco program in particular has a lot of great companies coming out of Latin America. In fact, some of our most successful ag tech companies and food companies came from Latin America, and GridX, the GridX program in particular. So a big shout out to GridX. We have a good question from Stéphane Louvier. Stéphane is from Oco6, a green tech making carbon saving and compostable materials to replace fossil-based plastics in disposable applications. We have a potential investor, but we need an expert to validate the technology. Can Syensqo support the validation of the technology and maybe join the investment round? That's a very practical question coming from a founder.
Yeah. I mean, one thing that's interesting, the types of polymers and materials we make are durable. We're not really a consumer product. So what I heard in that question was it's kind of a single use, which is really not our expertise. So happy to follow up with you, but part of our job is to filter as fast as possible, both to save your time as an entrepreneur, but equally to save our internal resources time. So, just off the top of my head, if it's a consumable, usable, one-time plastic, I don't think we're going to be the right network. But that's always something that why we love to talk to entrepreneurs is, hey, let's do that 45-minute call. Let's hear more. Let's see if either of us have a light bulb of where we can interact.
Okay, understood. And Christopher Wood asks, when you were looking at potential supplier startups, are sustainable cost competitive variants of common feedstocks of interest or only new materials?
Drop-in replacements that have the same performance at lower costs that are more sustainable are absolutely of interest. So, yeah.
Yeah, I mean, cost it's a very interesting actually, because we've been looking at biotech, for example, for a long time. Bio-based alternatives. I mean, it's been around for a while, but there was no interest from our business because the first question was always, what's the cost and cost parity. It's until recently that I think the increase in performance of precision fermentation that really has enabled lower cost and cost parity on these products, and really got in the interest of the chemical industry I think this is something that is really to keep in mind is, especially, I mean, we're very upstream, we're not selling consumer products. And so the cost is something that is really key with any materials, chemicals innovation. Really what you call the TEA, the techno-economic analysis is something that is crucial for any partnership and investments that we make.
That's great. Well, thank you, Capelia. And again, in a similar vein, Guhar Jamal is from a recycling company in Pakistan, and he asks if Pakistan is of interest, and he says that their firm, they're developing a thermal cracking technology for plastic and securing important supply chain assets to ensure growth and a scale up. And our development partner is a global engineering company. Do you think that that's the basis for a conversation with Syensqo?
It's always the basis for a conversation. So yeah, geography is not as important as, hey, what's the opportunity and what's the overlap with Syensqo? So I always turn it back to the entrepreneur. Look at our website, look at what we do. If in your thermal cracking process, you produce input X, Y, or Z, and we're a big customer of X, Y, or Z, then yeah, I could see an overlap between the two. If you produce kind of, let's say you take plastic and you produce a fuel grade oil that's going to be used for thermal processes, probably not a fit with us. We can't do uplift, we can't upcycle that material to something high performance. So again, I always, Ned, would turn it back to the entrepreneur. Great, it sounds interesting, but go look at our website, help me connect the dots the best I can by giving me a little bit more information.
Great. Yeah. Well, this is the fun part, putting you on the spot with 3-sentence pitches. But here's one more, just because I can't resist. Charles Cunningham says, we're planning to build floating oceanic solar farms located within the tropical oceanic gyres of the southern oceans. These will produce hydrogen using electrolysis. This potentially is huge. We've all heard that before many times. The cost of the hydrogen is less than $1 per megawatt. And we need to build prototypes, of course, and test them. Is that sort of large-scale industrial project the kind of thing Syensqo is interested in?
Peripherally, yes. I mean, we want to sell materials. So if your solar systems needed a bunch of high-performance materials that are going to last decades in the ocean, those are things we want to know about. But those development timelines are also super long. And so we also have to fit it within our own view of, hey, we want to get to revenue in a short period of time. So Syensqo is not a project developer. We're not even the end product producer in most cases. We're farther up the value chain. So a lot of times with startups that are way at the end developing big systems like that, there's too much of a divide between us. That person who's developing that system is going to say, look, I've got an EPC and I've got an electrolyzer company. Those are probably the people we interact with better. So, hey, the electrolyzer company who may need our core materials, the people building the floating platforms who say, wow, I need certain polymers that are going to withstand the marine environment. Those are the more natural fit with us because they're the ones doing the innovation, where this project, this big concept, that's probably more about financial engineering and pulling all the pieces together, an offtake agreement. That's going to be challenging enough. So they're probably going to push it down to their vendors to say, hey, you bring me the hardware that's bankable, financeable. I'm going to go work on, getting the finance to build these things and the offtake to acquire the hydrogen.
Yeah, that makes a lot of sense. Our founder, Sean O'Sullivan, in his remarks tomorrow at the opening of the main stage of the SOSV Climate Tech Summit, makes that very same point. He says that venture should really focus, for the most part, on using technologies to effectively deliver key new elements to the supply chain that decarbonize and even in some cases offer what people are now calling, and I just heard this in a session earlier today, a green discount. Why not? So if it decarbonizes and it's less expensive and the switching costs aren't too great, then somebody probably has a great business. But to build a giant infrastructure play is, of course, a completely different kind of investment and far riskier and takes a lot more time. Joseph Studholm has a great question, more coming at this from the standpoint of someone in academia. My role as executive in residence at Princeton is to find viable commercial pathways for grant-funded research, which are sometimes, but rarely, of interest to general venture capital. Often they are potentially great products in niche sectors who can benefit greatly from corporate venture in their sector. Does that kind of idea sound familiar to you? And is that of interest to Syensqo?
Yeah, so I can take this one. So we work a lot with universities, and we really follow what's going on. I think very early stage. We like to say we're fairly stage agnostic, actually, because we like to see things very early. We also look at things that are later stage. What we're really interested in is seeing something that has, strong science basis and maybe some early demonstration of some application. If it's really well with something that we're looking for or aligned with our innovation roadmap, we're not really afraid of looking at something that's fairly early. So I think it's great to engage with corporates if you see that the application may very well match something that's the corporate will be really good at and will help you with.
Great. So you're open to those kinds of inquiries from folks working in the research in the university. This is a small question, but I think probably of interest to a lot of people listening. Charles Yap, we had a question from him earlier, and he had a little quick follow-up. He said, can you describe your investment process? How long typically do you go between an initial meeting with founders and a go, no-go decision on investing?
Let's say the go, that's at least a 3 to 6 months. We're not different than most venture firms. So yeah, I'd say 3 to 6 months. And right now with just venture in general, we may get to go answers quick, but it still takes time to pull together syndicates. So just in general, I think we align with the market of how long it takes. In one case, we acted within, I think it was 6 weeks, but we had known that company for 5 years. So, goes and yeses take a long time. Hopefully no's, we're pretty respectful of people's time and we get back to them fairly quickly. It's always hard because of the amount of deal flow, but hopefully the no's, and this is what you'll have to experience as a founder and a startup person, the no's will come faster. And yeah, getting to yes takes us, I'd say, 3 to 6 months.
I would just maybe add to that as an advice for founders is reach out even if you don't need money, or especially if you don't need money right away, because I think it's really great to start building the relationship with a corporate partner. And it can take time to really build that trust and really articulate how we're going to work together. Once we've passed that, either it can go to a JDA, which brings value for your financing round anyway, or we can even become equity investors. So that would be something that I would encourage every founder out there to do. Is you're not raising, but it's okay, just reach out to corporates.
I see. And do you ever lead around?
Yeah, Matt, what you comment? Yeah, I mean we can lead or follow. Pretty agnostic.
Yeah. When Capelli and I both started in 2017, we were doing a lot more leading because there was just a dearth of investors who were interested in this space in general. So I think a lot has changed. There's a lot more people willing to lead. And so we're not a firm that says we have to lead. We want that startup to be successful. So we'll do what it takes. If it means we have to lead and step up, great, we'll do it. But all things being equal, if you have a financial lead, I think the market values that potentially higher, even though I disagree with that. But no, we have the flexibility. Our goal is, how do we help support the entrepreneur and the startup? How do we create a great partner for Syensqo and vice versa? And if that means we lead, we lead. If it means we follow, that's fine too.
Great. We're just about out of time, and we've covered a lot of the questions from the audience. Great questions. Thank you, everybody. And we've had a very engaged audience, I have to say. I'm just going to take the final question and ask a fairly broad one. which is in the past 4 or 5 years, climate tech as a category has really taken off. It's here to stay, I think it's safe to say. And I think that the centrality of important CVCs in the corporate world, especially in corporations that are deeply grounded in science and technology, is emerging as a central theme, a central factor. That's our perspective from SOSV. How have you seen things change in the 8 years that the two of you have been at Syensqo? Do you feel something different in the marketplace now versus 4 or 5 years ago when climate tech really started to lift off, or compared to 8 years ago when you first got started working with Syensqo?
Well, I'll start, and maybe Capella, you can finish. When I started my venture career in 2000, it was a regulatory-driven change. Hey, we're going to transform this industry by doing a regulatory change. Fast forward to today, and it's a consumer-driven change. It's a corporation-driven change. It's no longer governments telling us, it's customers pulling on those solutions. So at Syensqo, our customers are asking for different products. They're asking for bio-based, they're asking for circular, they're asking for low carbon. So at Syensqo as a corporation, we have carbon neutrality goals. We have goals on circular sales. We have an internal price on carbon. So just even within our own company as a customer, we've seen that shift. So the biggest shift I've seen is the customers wanting and demanding and pulling, which I think is great news for all the entrepreneurs on the phone.
Great. Capella?
Yeah, maybe just to add to that, I mean, it's probably going to echo what probably every investor in this climate conference is going to say anyway, that, it has changed so much just because there is what Matt mentioned around consumers, but also there is just so much funding that's coming from the government for these technologies. There's so many funds that have really mushroomed. I mean, which is so few of us many years ago. And now, we see like new climate funds that are really, being created. So many funds they used to be generalists that have, now a new fund for also climate applications. So just the funding that has gone to this field is tremendous. I think a big change that we have seen also is the talent. There's so many bright people who are really excited about the future and really care about their own future or the future of their children and how they can really make an impact. And so just the level of energy and enthusiasm that we have seen is very exciting.
That's great. What a great note to end on. So thank you both very much for your time and for the great work at Syensqo. And we look forward to seeing you soon and many meetings with many founders and helping the climate tech world advance. Thanks again.
Thanks for the opportunity. Bye.